So this video, I'm self-calling the rotation of death. A little bit about me, guys. I'm Keith. This is Crypto Bullseye, and I've been on my journey for 4 years. I've obsessively and compulsively taught myself the crypto market, technical analysis, fundamental analysis, coding backend, smart contracts. And then further than that, deeper into that, what I've been really educating myself is macroeconomics, how money works, how the world works, how everything comes together, and how understanding what time of what cycle you should be in at any given time to give you that advantage. So, like I say, guys, I've made so many mistakes over the 4 years that I've been in crypto, and I want to teach you the mistakes that I've made. The one that we're going to be talking about today, I'm self-calling the rotation of death. So what does that mean, guys? It's when one cryptocurrency runs and your cryptocurrency hasn't run, and then you come out of that cryptocurrency, buy the one that's pumped because that's the one that's in the news. That's the one that everybody's buying. When you buy that cryptocurrency, you get the pullback, you get the negative P&L. Then never guess what happens, guys? The one that you are in run happens time and time again, and that's the rotation of death. So first things first, my intention to you guys, I don't want you to copy what I'm doing, guys. I'm not a financial advisor, but what I am going to be doing and what the niche of my channel is to teach you risk management techniques to ensure that you understand exactly what you're getting into, how you can preserve your risk, what happens if it goes wrong. Because when things are pumping and things are going green, anybody that's been in crypto within the last few weeks have got nothing but euphoria. Their P&L are going up, and you're probably hearing from your friends now, which crypto shall I buy? Which crypto shouldn't I buy? And the ones that are in the news are the ones that are pumped. The ones that are pumped are the ones that the new retail are going to be buying because that's the only thing that they know and they don't understand the market cycles. So I want you to wake up every single morning and ask yourself this question. And this is something that I do every single morning, guys. Wake up in the morning when your P&L's in green, ask yourself this one question. What happens if you lose everything? Genuinely, what happens if you lose everything? Because it could happen and it will happen one day. So risk management and preservation of capital techniques are one of the most important things that you can learn, because ultimately, if crypto goes down and you've protected yourself, then you live to fight another day. But not only do you live to fight another day, you live to fight another day, and you've got the capital there preserved to get much lower levels to take advantage of any new swings that crypto is going to give you. So that's what I'm about, guys, risk management techniques. Let's learn about the cycle of death, how people feel during the cycle of death, because we were talking about the XRP break on the channel, guys. We got the XRP break. We said that there was a 7-year accumulative phase, and it was going to be the biggest breakout in crypto within the whole of the crypto market within the longest space of time. And that's exactly what happened, guys. So is it too late now? Wasn't too late then. It is too late now. However, I'm not going to teach you to suck eggs, guys, because there's thousands and there's thousands of cryptocurrencies out there. So if you miss one, there's another one. And this is what I'm going to show you. So XRP, anybody buying XRP up here, what is the risk factor of buying XRP up here? We know that XRP's got a rejection. In my last video, we said we got a 786 retracement from its previous all-time high that was a sticking point that's getting rejected from, which is indicating some kind of a pullback. So how deep would the pullback be, and how would it affect you if you put $1,000 into XRP here? And it just pulled back to a 61% retracement from its previous swing high. Remember, guys, buy the rumor, sell the news. It's something that you'll hear time and time again. XRP's had so much hype behind it. And the people that bought the rumor, knowing that XRP was going to run, they're the people that are cashing out up here in profit. The people that are just hearing about XRP now, that think that they've missed the boat and they think that it's going to go up to the moon anytime soon, they're the ones buying here now. So what would it do? Let's measure to your P&L. If you'd bought XRP at the top at $3 and we were pulling back to the 61.8% retracement, guys. Price often pulls back to the 61.8% retracement. That's the golden number. And that is 51% to the downside from where XRP is now. So your $1,000 turns less than $500 within the space of however long this swing lasts. So that's what happens, buying the pump. Now, what happens if you're in something that hadn't pumped, something like Fetch? Something that's just broken a previous high and it's putting in higher highs and higher lows and continuing, and it's got wiggle room. The one thing that this one's got, Fetch, in comparison to XRP, this is what I'm going to keep teaching you time and time again. The one thing that it's got, Fetch, is you've got a risk factor. The risk factor is you've got this previous swing high. That previous swing high has just been broken. That's an RS flip. So what does that give you guys? It gives you wiggle room. You know that if price comes back below here, then there's a chance that we're going to get further downside action. So what does that do to your P&L if you're taking a trade? If you're waiting for a pullback to this support zone, this is the important thing. If you're waiting for a pullback to this support zone, this is going to be your best risk management, because you could put a trade on there knowing you could shoot for the previous resistance level up here, and you know that you can protect yourself below the previous low. That gives you a 4.8 risk to reward. If you've got a 4.8 risk to reward, then you take one trade out of 4.8 times, then you break even. You only need to win one out of every 4.8. That's the significance of preserving your capital. Let's do the same with XRP. Where would you preserve your capital? Just look at that chart and tell me, where's the previous swing low? Would it be here? Would it be here? Would it be all the way down here? You tell me where your protection zone is here. If you're shooting for an extension on XRP, when we know that we've got a rejection from the 786, we've seen it in the last video, we know we got a rejection at the 786. So if you're doing a long on XRP now, where are you actually shooting to? Where are you shooting to, guys? Seriously, where are you protecting yourself? What is that doing to your risk to reward? So, for an example, the rotation of death. You're in fetch now. You've just made a little significant break on fetch. However, fetch has run in the last few days 9%. Fetch has run 9%. XRP in the last few days has run nearly 500%. So from a mindset perspective, if you're in fetch, you've got all your eggs in one basket. And that's the other thing that I'll teach you guys. Don't put all your eggs in one basket. It's a recipe for disaster. Some of these cryptos will fail. If it's your crypto that fails, how is that going to make you feel? Remember, wake up in the morning and ask yourself, what if I lose everything today? So somebody that's in fetch, they've just made 8%. They've made 8%, but they didn't make 500%. So they want to make 500%. So they think that the thing that's going to make 500% is going to be XRP. So they'll sell their fetch here. They'll buy their XRP, then their XRP will pull back. Happens time and time again. This is the psychology behind it. XRP will pull back. That's going to reduce your P&L. That's going to reduce your capital, and that's going to reduce your position in the market to take advantage of gains. And you've come out of fetch, and then what will happen? You'll come back, you pull back, and fetch has got a higher probability of making that big move because XRP's already made that big move. So that's what will happen, guys. You'll go from something that would have been into a profit to something that's going to put you into a loss. And it happens time and time again. Should I buy XRP? Should I sell so-and-so and buy XRP? Same thing, guys, Algorand. You look at Algorand and you look at the chart and you look at where can you preserve your capital. It's the main thing. How can you get into something with the least amount of capital at risk and knowing and understanding? Because, guys, you are wrong. It's about being right more times than you're wrong and having a bigger risk to reward when you are right. That's the only way you can get an advantage in crypto. To get that bigger risk to reward, you need to have the limited amount of capital preserved. So you can't do that one. You can't do Algorand. We don't know where to protect ourselves in Algorand. We don't know if it's going to put in new highs. Looks like it's more likely to retrace. Cardano, exactly the same thing. Huge surge to the upside. We don't know if it's finished its move. It might go up a little bit higher, but where can we protect ourselves? We can't. H-bar, everybody's talking about H-bar. Has it finished its move? We don't know. How can we preserve our capital? We cannot. Guys, look at the chart. We cannot preserve our capital there. Then the next for virtual. Next for virtual, it's looked like it's topped out, started to pull back. Where can you preserve your capital? Below this previous swing low. What would that do to your risk to reward? If you were taking something from here, protecting yourself below the low, exactly where are you swinging to, guys? Look what this does. This is going to make you lose everything. So don't fall for the rotation of death. Now, ones that haven't pumped, we've seen fetch, we've talked about fetch. Pull back on fetch. You've got this as your protection zone. You get 4.88 risk to reward. If it comes back into trend, then you're wrong. If you're wrong, you want to be wrong with the least amount of capital. Got Floki next. Floki is forming a lovely bull flag. So all we're doing here, and you can use the crypto bullseye trading strategy for this. You've got, let's do this strategy together. You've got from the swing low to the swing high, we want a 618 retracement. We need to come back down to this 618, come back down to this 618. What does that coincide with? Previous resistance, previous resistance, previous resistance. We'd expect that to flip support. We would expect price to come back down to retest the previous resistance to act as support, to confirm it as support. So that's why this 618 is important. That's why the additional complements is important. Then what's the next thing we need? Stochastic RSI oversold. That's a tick. So what do we need for this trade? What do we need for this trade using the bullseye strategy? So you want a rejection, come back down, 618, test this previous resistance point, which coincides with the 618. That's going to act as support. You've got your trend line on there. You've got your trend line on there. Once you've hit the 618, the stochastic's oversold, you've got your break. You've got your break. Need the close. Then what you're doing, risk to reward. Shooting for the previous high, protecting yourself below the previous low, subject to a minimum of 2 to 1 risk to reward. Just a 2.06 risk to reward. So that would be something that you could take as long as it wasn't a volatile break which pushed us up too high, which wouldn't allow us to have the 2 to 1 risk to reward. So Floki looks better, obviously, than HBAR. Floki looks better than ADA. Floki looks better than Algo. Floki looks better than XRP. Should you buy Floki? It's completely up to you guys. This is risk management I'm teaching you. Next thing, Akash. Now, this one looks quite nice, Akash. We've got an area to break and close above. The area to break and close above is the $4.70. Once you break above $4.70, you've got little resistance all the way up to its previous all-time high, which is sitting from where price action is now, 30% to the upside. However, how can you play this, guys? And are you going to get the 2 to 1 risk to reward? So stick a Fibonacci on there. What we need is a 618. We're probably not going to be able to get this 618. So if it pulls back to the 618, which coincides with this previous Lux Algo support here, coincides with this previous resistance, you'd expect to flip support. See how these things play out, guys. You've flipped resistance, 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 resistance. You've flipped. You've come back down. And this 618, which is the golden number, coincides with the previous resistance. Exactly the same. The 618 coincides with the previous resistance. So you use the 618, your friend. If you've got previous resistance, that gives you additional confluence and that gives you additional weight behind the move, guys. So remember, wait for the break, see how volatile the break is. 2 to 1 risk to reward is the minimum risk to reward. Protect yourself below the low. If you're wrong with the least amount of capital. So that's a cash network. And then we've got Propy next. See, Propy's actually breaking now. So it's a little bit late for Propy now. Where would be a good time for Propy? It would be the break here. If I just zoom in, it would be the break here, and then you can protect yourself below this previous low. However, you can see we've had an acceleration to the upside. We're getting rejected at the previous high here. So the only option for me would be if we've got a double top here, got a reaction here, lower low, lower close candle, confirming we're coming back down to this level. Then I'd be interested again. So it's all about how can I preserve my capital? I can't preserve my capital here because I'm not going to get enough risk to reward. I can understand that by just looking clearly where price is now, where I'm protecting myself below the previous low, where I'm shooting for the previous high, 1.16 risk to reward. Another thing to think of, guys, when you're using this strategy, another thing to think of when you're doing this is this. Let me zoom into this because it's important. These wicks here represent rejection. And when you get one wick followed by another wick, followed by another wick, it's telling you one thing. It's telling you that you're being rejected. Bears have got control here. Bears have got control here. Bears have got control here. The wicks are telling a story. And then you get this lower low, lower close candle, pushing price action back into this and creating this bull pennant. So you can get a story from these wicks, guys. And one thing, and the reason why I'm telling you that is when I'm shooting for highs, I like to shoot for close highs. So close highs. And what does that do to your risk to reward? Makes you pretty much gain nothing. So when you're looking for a close high, that's the more conservative level because we know that the bears have managed to push price down and push price down and push price down. So this has created the sticking point where the bulls have not managed at any given point until now, until this candle here, to break and close above. So this is the first break and this is the first close above the extreme highs of these previous candles. We managed to touch up here, but then the bears push price action back down to this level. So the only way I'd be interested in this, guys, and this wouldn't be the bullseye strategy, this would be completely separate, is a retest to this level, because that means that if this acts as support, that gives you one thing, gives you a protection zone. If you've got a protection zone, then you can start shooting for higher levels, knowing that if you're wrong with the least amount of capital. The last one, PYR. PYR. Okay, so see what I mean, guys? The bears have got control. Push price down, push price down, push price down, push price down. Each time they're pushing price down back to this level, which is sitting on PYR, Vulcan Forge, $4.14. $4.14 is the price to overcome. And this is why the significance of the break is so important. You can see this is the daily, and we are at $4.37. So at the moment, the daily candle is breaking, and at the moment, the daily candle is closing. However, we've still got 12 hours on the day left. So could the bears push price action back down into this area here? Because they've done it once, they've done it twice, they've done it 3 times, they've done it 4 times, they've done it 5 times. This is why it's important to get the significance of the break and the significance of the close. If we get a close above the extreme highs of these previous candles within the close of today, that's signaling the first time that we've managed to get a body, the body of the candle, above this previous high. And that's signaling strength. Then again, guys, this would be your support zone. That would be your protection zone. Where would you shoot on this? 5.43. So if we get a pullback back down to the $4.14 and that holds as support, what does that do to your risk to reward? Shooting for the previous resistance level. We know that we're wrong below this previous low. That's a 7.51 risk to reward. If we're wrong, which sometimes we are, bam, least amount of capital, live to fight another day. But the other thing that does happen, guys, if you are wrong, think about this. You're risking 7.51 risk to reward. You've got a limited amount of capital that you're risking here, and price does this. You're out, you're in a loss, price comes down here. How would that make you feel? Would that make you feel bad that you just lost that amount? Or would it make you feel good that you've just lost out at $3.98, just under $4, and now you've managed to get an opportunity at $2.63, which creates bigger gains to the upside with you risking the least amount of capital? So that's what I'm talking about, is time in the market, guys, timing the market. And then obviously the rotation of death. Don't fall for the rotation of death, guys. I fell for it plenty of times. Don't fall for it. And it's all about your emotional mindset, what people are telling you, what the news is telling you, what influencers are telling you. Don't fall for it. Have a clear head and ask yourself every single morning, what happens if I lose everything? I hope you enjoyed this video, guys. Take care and goodbye from me.